Hello and warm welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at Live Trade Room, and we're about to trade the US Open fully live and interactive. Just before we begin, those of you who are interested in looking to make consistent returns out of these markets and looking to trade from a high degree of knowledge and understanding in terms of the decisions that you're making in this marketplace, then we can certainly help you as an organization. We do have a wealth of resources available, from education through to daily live trade rooms, and lots of trading tools like a risk management software and things like that. So it's really quite a comprehensive offering for those of you that do want to learn how to trade these financial markets. So for more information, just go to our website, thelivetraderoom.com, and we'll be happy to, and do feel free to speak to any one of our staff through the chat function there as well. Okay, so let's get straight into it then. Let's start with our risk warning. As always, please, of course, take note of the risks involved in trading the financial markets. It's an inherently risky environment, of course, but without risk, there is no opportunity for reward. So it is a trade-off versus one for the other. But we do want to not just focus on booking in profits, but also having a careful eye on your exposure in each trade, and how to manage trade, how to manage each trade accordingly, and have a really strong focus on protecting your capital, especially during challenging market conditions like we're currently facing. So without further ado, the first thing we do, of course, when we get to our trading desk is to be mindful of any news events that are likely to impact our trading. There is a very significant and major news event coming up pretty shortly at 1:30, so in about an hour's time, and it's the CPI news event coming out of the US. So just for your information, you may or may not know, it is a monthly figure, but it is a figure that the Fed are keeping a very, very close eye on. And of course, CPI is just it's just a measurement of the cost of living for you and I, for just normal people. And we've got two figures there. You've got CPI, which is a normal basket of goods that are assessed to determine, I suppose, the cost of living, the cost of everyday items that we all consume. So we've got the core CPI there as well, of course. So that's just minus energy and food prices. So it's important to understand inflation. There's a lot of it in the news right now from these fearful markets because of an increase in inflation. It's understandable to expect that to a certain degree. We've had a large amount of stimulus pumped into the system. We've got record amounts of dollars being printed. We've got historical low interest rates in the US and across other major economies. And as a result, it's very likely to expect that there's an uptick in inflation. And these monthly, admittedly, they are monthly figures, but they will play a role. If our cost of living increases, then inflation is pushing to the upside. We're likely to see like the 10-year bond yield, for example, tick higher. And as a result, one of the tools that central banks can use to sort of take some heat out of the economy is to increase interest rates. The problem with that, everyone's debt repayments start to go up, and that can create a whole set of other problems, of course. So the Fed will be watching this event very, very carefully. We're expecting positive numbers, but nothing of any. You can see historically here over the last number of years that we're in kind of normal territory as far as CPI is concerned. Same situation, maybe slight uptick this month. We'll wait and see on the core situation. And like I said, the Fed will be watching this very, very carefully because they've said many, many times that they believe the inflation story to be transitory, meaning that they don't see any structural long-term inflation concerns. It does remain to be seen whether that is the case or not. Those of you who monitor sort of 10-year yield, this is a 5-day view, so we were down 2 days ago around the 156, and we've kind of slightly ticked higher, but you can see we flatlined over the last day or so. And this is bearing in mind we've had a bit of a sell-off really across the equity space over the last number of days. They're just holding at their lows, so we'll go into those charts now in a second. I'm just looking at off screen. There's a market that's quite close to breaking, which would be worth looking at. So that's the news events for the day. I do want to reference one other event, which is today at 6 o'clock. If you experience a bit of significant volatility around 6 p.m. today, it very well may have something to do with the 10-year bond auction. So we'll see what the demand is for the 10-year note and the highest price offered for that bond. So we've got the 10-year today, and tomorrow we've got the 30-year bond auction as well. It is a bank holiday in Switzerland, France, and Germany tomorrow as well, in observation as Ascension Day. Is it the same in Switzerland? Yes, it is. Okay, so we'll have slightly lighter markets tomorrow as far as the European session is concerned. So that's just a little kind of overview from a news data-driven perspective. So let's now get into these trades, and I'm just looking at the euro pound to the downside. So we'll go straight and have a quick look at this because we're beginning to see this market just make its move to the downside, as you can see. Let's go into it on a. So that we're breaking below this little level in there now. So we are below that 85.80 level, which is important. So we'll get rid of this. So we're going to look to get into this trade now. We've got this little pullback, as you can see. So I'll just get into that trade now. I just got to post it offline. So we're seeing the pound begin to show, signs of a little bit of momentum against the euro. The euro itself has taken a bit of a roll to the downside, so it's not really pound strength as such. It's more to do with European weakness. So we'll get into this trade. Want to make sure we put in the correct stop loss. We're actually going to take this handle in here, the 86.12. So the 86.16. 86.16 level to the downside, and we'll sell that trade.
Comments here from UK PM Johnson. There's a high likelihood of a COVID surge this winter.
Okay, you'll see this trade now pop up on the screen in just a second. So 86.16. So there's our entry to the downside, and there's our stop loss just above this little handle in here. Okay, sorry, we'll just get this trade off. Okay, so I'll just post this into our trading room. Okay, and we'll go through some of these other markets now in just a moment. Okay, so we'll see if we get a further push to the downside in this trade. The dollar CAD is the next one that we were looking at to see if we did manage to get that little break below that low there, but we're not really getting it just yet, so we come back to that. So what I'll do is I'll just move these around. We'll have the euro dollar. We'll have the pound yen. See if this market was able to make its move to the upside. Oops. Okay, we'll stick the dollar CAD just in here. So we can just keep an eye on that. Crude oil was the next market we were looking at. And we'll continue to just monitor the S&P. So we are getting that move just above this high in here. So a buy trade above 65.50. We're now up 66.19 level. So so it does look like there's a bit of dollar strength beginning to creep in today. So that will be quite interesting. So this is our trade plan then from last night. There's a potential move to the downside below this little structure in here. So we'll see if that opportunity reveals itself. Okay, so we'll monitor that euro pound trade. So it's a breakout sell trade. Our entry price is the 85. $85.75. Our stop loss is the 86.16. So pip exposure wise, that's a 41 pip exposure. Sorry, just bear with me 1 second. Apologies for that. We're back, I think. Let me see. So is the sound now better? Sorry about that, Renko. I needed to move away from the desk there just for just for a few minutes, and when I come back, I forgot to turn the sound off, turn the sound on. So I think you should be able to hear us okay now. Okay, good. Yeah, sorry about that. Okay, so we are currently selling the euro pound to the downside. So it's just a little handle in here. We're looking to just break this multi-week low, just sitting in there. We're currently below it, but we're going to have to give it time because the pound isn't that strong today. Are you in anything at the moment, Renko? Let us know. So we just might have to be a little bit patient with this trade. It's the euro pound can often sort of grind anyway. So the other market we're looking at is the euro dollar to the downside below this level. We just got CPI data out in about 30 minutes. So we don't want to get too heavy-handed with the dollar and then get blown out of those trades depending on the CPI. Crude oil to the upside above that 65.53 is performing well. And we're going to keep an eye on the S&P as well. So as you can see, it's pretty much drifting sideways at these lows. So we only just got into this this euro pound trade. Yeah, you're not in a trade at the moment. Yeah, not really that surprised. These markets have been unforgiving, let's say, this week. So we've had a couple of days of uncorrelated markets. So we've had the indices selling off, but we've also had the dollar selling off. Couldn't really see where a lot of that capital was coming out of indices, and we couldn't really see where it was going. So that always makes us feel a little bit nervous about trade selection and direction. So this week has been a bit of a tough one. And you get long periods of kind of sideways moving when nothing happens, followed by just a bit of an explosive move in random markets here and there. I'm thinking of the pound, the dollar CAD to the downside, even the euro dollar, the euro pound, should I say, a couple of days ago. If I just show you on the daily time frame, like just a very, very significant flush which bounced off the low, and now we're getting a continuation trade. So we have to be really quite patient between Monday's selling and today's trade. So that's nearly 48 hours. So that's a long time to have to wait to actually get into a trade, but that's really what's necessary at the moment, and it's a bit of a pain. So we can expect this to continue to grind, unless something changes, of course. And we're actually getting into this. It's a technical trade to the downside, but there is euro weakness, and we're looking to trade that euro weakness rather than the pound strength story. So the CAD looks like it's going to strengthen against the dollar again, and the dollar looks like it's going to strengthen against the euro. So the weakest currency is the euro, and the CAD is one of the stronger ones. Crude oil is a nice trade above that 65-60 level. So if we get a constructive pullback on that trade, then that could be a decent opportunity to look at. The indices are all in a sort of an odd place at the moment. Now, when we do get this type of price action, they often wait for the next piece of stimulus before they get a bit active. So we can be kind of prepared for that, really, to a certain degree. So we'll see how these markets react to the CPI data, which is due out now in a short while. Dow Jones FTSE, these are just sort of really strong rejections of the downside, aren't they, across the board, either yesterday or today. The market that's worth looking at, and we've got the structural failure trade, is in the yen trade. Now there's a deviation really between what's going on in Asian markets and what's going on in European and American markets. So strong level of support, and we're getting a little bit of a break of that level just today. So we're not getting excessive, follow through, but if we keep an eye on the monthly low, the multi-month low, the 28,247 level, you can see that we had a bit of a pullback. We had the good run up, and then we flushed through that level, and now we've pulled back to roughly that price. Currently, the only problem is we've got a very significant kind of stop loss, but it would be selling below the level, and it would be putting a stop loss above it, which is what you would normally look to do. So that's a sort of a 700, close to a 700 point move in markets like the Nikkei. Okay. We'll just keep an eye on the Nikkei, really. The price that this dollar CAD sell trade just keeps grinding lower. We've been doing this for quite some time now. So the next level is the 2077 level. So that's our trade plan for the session. This is on a daily time frame for the pound yen, so above that 153.98. We're interested to see if the euro dollar can actually break below that 121.14 level. That's certainly a technical sell trade, but it's we do have major news coming out, CPI data, which is due out pretty soon. So it's not really worth getting into dollar pairs or the US indices prior to this news event. So it's likely to be a significant event. That CAD really does look like it just wants to do nothing but push lower. Hi David, I hope you're keeping well. You've been in the pound dollar short on the 5 minute. Yeah, on that short trade. Okay, that's interesting. So there's your potential structural failure trade to the downside on the euro dollar.
Update on vaccine news from the EMA, confident that vaccines will work against the Indian variant.
So there's definitely a bit of dollar strength, isn't there? Across the board. We spoke about this last night, actually, David, as well. Below that 4100 is a bit of a green light to get in on that short. I think I know you do look like to sell the highs, but actually a break of today and yesterday's lows give us that important distinction to make. So we're just traders that prefer the breakout trades. So there is your consolidation. We want to see all of this. This is all good. We have a lower highs beginning to kick in, and we monitor the lows. Now, when prices break that 4100 level, then what that creates is a lower high, and that is the technical understanding of a short-term bearish move, a trend. So with bullish trends, you get higher highs and higher lows. When you get prices reversing or trending to the downside, even on a short-term time frame like a 15-minute, then you're looking for lower highs and lower lows. That just implies that momentum is pushing prices lower. So we'll be looking to get into this below the 11400 level. Like we've just said a few times, actually, we've got CPI data due out in 15 minutes. So even if prices did break down through these levels now, we'd want to just bide our time a little bit. So for us, it's just what we refer to as a high probability trade, but it's below the 140-100. Like if you really go sort of micro levels, then you're right. There's structures within this level, sort of in this little very, very tight range as well. Could look at on like the 1 minute time frame. And you're quite right, we're just beginning to get that, and there's your same analysis really as what I was just talking about. It's just on smaller time frames. So the volatilities, the lower you go, the more volatility you're going to experience, and the more you're competing against. So all of your robots and trading bots and things like that, they're all in at these lower levels, so they'll just get in and out of these markets a lot quicker than you or I are able to. So that's some of the difficulties, but it's breaking lower, so there's nothing wrong with that trade on the smaller time frames. It absolutely stacks up. It's just we don't trade, like the 1 minute charts, so we want a little bit more confirmation on slightly bigger time frames. But that's just I suppose our way of trading, and there's no right or wrong way of trading. It's about just developing what fits and what suits you and your personality and your capital you have available and the amount of time you have available and things like that. So but yeah, I can absolutely see the sell trade. It's materializing, so fingers crossed we get a nice strong explosive move. Are you holding this event going into this CPI news event, David, if you're still with us? Marginally, the euro is actually marginally weaker than the pound, so that's why it's our preferred potential entry to the downside. So like the pound, we are getting these prices to break lower. We just got this CPI data, and it's likely to be really quite volatile for the dollar and the US indices, especially if there's a deviation, if there's a strong deviation of the number, and it just remains to be seen. There's a lot of sort of commentators out there that are not that comfortable with these CPI figures. They can be fixed and manipulated and over time, and does it give us a true indication of genuine inflation? Some say not so much, but there's no doubt about it. The Fed are really worried about these CPI figures. They formulate a part of their discussion when they talk about inflation, of course. But these are monthly figures, so you wouldn't expect a significant deviation off these numbers. But 2 or 3 basis points would be enough to be quite volatile for these markets, and we will be taking a strong look at the US indice markets as a result. So we've clearly got the dollar. The dollar is one of the stronger currencies really today, as you can see across most of these dollar pairs. In fact, the CAD to the downside, again, the CAD is the only one that's... Now we can put all the commodity currencies in here. No, sorry, the CAD is the only one that is strengthening against the dollar. All other markets are weakening against the dollar. So it does help with a euro dollar and pound dollar sell trade. So that's the only reason why we're just marginally preferring the euro dollar to the downside.
So just over 10 minutes time now to the bottom of the hour as we wait the all-important release of the day with the US April CPI print. So what base effects will continue to distort the US inflation figures higher on a year-on-year basis. Markets will be focusing on any signs of faster underlying inflation pressure. So we've done some polling of our clients into the order of the CPI numbers. To consensus landing, starting with the core CPI year-on-year print for April, a reading of 2.3% expected versus prior 1.6%. The range seen of 2.1 to 2.5% according to Reuters. Moving on to next, the year-on-year figure with 3.6% expected versus prior 2.6%, range seen to 3.4 to 3.9%. Moving on then to the CPI month-on-month headline number, 0.2% expected versus prior 0.6%, a range seen of a flat reading to 2.5%. Finally, the core month-to-month reading for CPI, 0.3% expected to remain unchanged, a range seen of 0.1 to 0.5%. Additionally, from the US, the real average weekly earnings for April year-on-year prior of 3.9%, while real average hourly earnings prior of 1.5%. So note here from HSBC beforehand, they look to the combined effects of economic reopening and sizable fiscal policy support, likely putting upward pressure on core inflation for a second consecutive month, expecting a close call between a core CPI increase of 0.3% month-to-month and 4% month-to-month, just barely rounding down to 0.3% on their estimate. They look to hotel lodging rates likely continue to recover. The price index for airline fares may have increased faster, falling modest 0.4% in rise in March. As well, price categories related to vehicle travel, such as used cars and trucks, as well as auto insurance, may have also seen increases. They look to rental inflation as well, may be starting to pick up. It's expecting increases for both the rent to primary residence and others equivalent rent indexes. As well, they note given the base effects from the sharp fall in core prices last year, they expect the year-on-year rate of core CPI inflation to rise to 2.4% from prior 1.6%.
Okay, so really these numbers are pretty much priced in, CPI and core CPI, and don't forget CPI is just the cost of living for you and I. If that's going up at an unexpected rate, that's a big problem for markets like your indices markets. If it goes up at a rate in line with the central bank, and the central banks, as you probably know, are suggesting that inflation's transitory, so it'll be under control. They're not too concerned about the massive stimulus, the untold quantities of dollars that are being printed, and the historic low interest rates. They don't think those are the conditions in which, I was going to say an improving employment situation, and broadly it is improving. The stats, the last non-farm payroll figures last Friday, the unemployment rate actually increased. We're expecting 1 million jobs to be added. Close to 1 million jobs were expected to be added, and we saw a figure of 266,000 jobs added. So a very significant miss. So a really poor non-farm payroll. So it'll be interesting to see what figures we get, and most importantly, how the indices markets react, and see if we get any significant uptick in the 10-year bond yield. And we're actually going in today. Now we're going into the 10-year bond auction at 6 p.m. this evening. So these are all potentially really volatile events. It just remains to be seen whether it's under control or whether it's a little bit out of control in terms of unexpected inflation. That would be a bit of a shock for these markets yet again, which is why we've been a little bit tentative this week. The trading conditions have been not great. We've not been as active as we would have liked to have been as a result of that. And we get weeks like that sometimes. So it's hard to make incremental gains week in, week out when you're trading financial markets. Sometimes it's more about being patient and not jumping in and out that often. We refer to it as the market conditions. Understand the market conditions, and sometimes that's technical. Sometimes you're in a consolidation band. Sometimes it's fundamental, where there's indecisiveness regarding inflation to the upside or to the downside, or the Fed, or whatever the news event may or may not be. And there's no doubt about it, there's a little bit of fear and anxiety in the indices markets this week. I mean, that's clear to see. And that can often just have a knock-on effect across other markets. It looks like the dollar CAD is continuing its move to the downside. So we do like this market below the 120.77. We're only 4 or 5 minutes away from CPI. And if there's any big shock, you know, we're likely to see some volatility. If there's no big shock and we get these numbers come in very much in line with expectations, then we can probably expect some of these markets to continue in line with the direction in which they're currently moving. So we just want to see if this is a game changer event or not.
3 minutes now until the release of the US inflation numbers. Just run through of the order we'll be doing this, starting with the core CPI year-on-year reading with 2.3% expected, onto the year-on-year figure with 3.6% expected, then to month-to-month with 0.2% expected for CPI, and core month-to-month 0.3%. A final note here from TDS advising against extrapolating, consistent with Fed officials citing transitory factors, but a surge in used vehicle prices along with strong reopening of related gains in airfares and hotel rates likely to a sharp pickup in the core CPI. The base effects will lead to further acceleration in the year-on-year data in May, but that should be the peak. They note that the strength in used vehicle prices appear to be due in part at least to a shortage of semiconductors, which is holding down new vehicle supply, thus boosting demand for used vehicles, particularly by rental companies.
Okay, so we'll get a bit of a snapshot on the CPI figure coming out now in just a moment. Okay, so we'll get that out now in just a couple of minutes, I'm sure. Shubham, thanks for your comment there. Aluminum or aluminium, however you want to pronounce it. Yeah, question mark. All of these commodities are experiencing very significant bull trends. We don't trade aluminium on the futures market. We do the commodities we look at are gold and crude oil.
Let's go now. 1 minute.
So 1 minute to go for that CPI figures. So I don't actually recall and I don't know the price move of aluminium. I'll just quickly find out. Okay, so we've got the CPI data out now in just a second. Okay, that's not quite what I'm looking for. So the spot price.
10 seconds.
Okay, wow. 2,527. Okay, let's have a look at I'll come back to that in just a moment if that's okay. We'll just get the CPI data.
3% for core year-on-year, year-on-year 4.2%, month-to-month 0.8%, while core month-to-month at 0.9%. Again, repeat the CPI numbers with core year-on-year at 3%, ahead of expected 2.3%, year-on-year coming in at 4.2%, big beat on the 3.6% expected, while on the month-to-month figures 0.8%, again a beat on 0.2% expected.
Okay, so a big uptick.
0.9% versus expected 0.3 reading. On the real average weekly earnings year-on-year minus 1.4.
Look at these numbers. The Fed have been telling us there's no significant uptick in inflation, and these numbers now are beginning to suggest otherwise. So what does this mean? There's your big move to the downside. There's your dollar strength trade. Let's have a look at the US indices markets. We wouldn't be getting in on, we're not news-based traders, so we don't get in on news trades anyway. So we want the market to determine what it's looking to do and then look to get in on those trades. So I'll come back to your aluminium in just a second, because I just looked at the prices, and yeah, they really are, accelerating, aren't they, to unbelievable levels. Okay, so look, we're extending these little levels to the downside. We just have this little yesterday's low, so we do like these markets to. So this is a bit of a shock in terms of an increase in inflation, which is clearly not priced in. So we would expect the equity markets to sell off across the board, which is kind of what we're seeing. It's not extreme, but it is selling. We're seeing strong reversals across these boards as well. The Nikkei very well may take a bit of a plunge to the downside, but certainly the S&P below this little daily low would be our first port of call. And you guys are quite right. Sorry, I don't know why that keeps moving. Does it keep moving? Let's look at it on the hourly. Sorry. Yeah, sorry. So this is the level. So this is yesterday's low. We'll see if prices can break below that 41.13 level.
I suppose CPI numbers seeing the Nasdaq 100 index futures extending a loss to 1.5% as well. Treasuries tumbling off on the CPI surge.
Treasury. So we want to get back. We want to get in on these markets in a pullback. That's basically where we're at. The only thing that can be a little bit of a concern for these markets is a bit of artificial buying.
Also posted the full report now onto our board, but just a quick looking to the index for used cars and truck, a rise 10% in April, the largest 1 month increase since the series began. As well, the energy index decreased slightly, decline in the index for gasoline in April more than offset increases for electricity and nat gas. Overall, they add that the shelter, airline fares, recreation and motor vehicle insurance, as well as household furnitures, were among the indexes with large impact on the overall increase.
So I'm just watching the S&P 500 because it's an interesting development. So that's what we would recall a bit of a shock for these markets. I'll see what the overall. So the CPI, so year on year, 3.0, estimated 2.3%, previous 1.6%. So a significant uptick there. Oh, sorry, that's except food, and so that's the core CPI numbers. 3%, estimated 2.3%, previous 1.6. So significant upticks on your CPI data. We're seeing 4.2%, estimated 3.6, previous 2.6. Significant uptick there. So this is a potentially a bit of a problem for the Fed, which are saying that yes, we will see some. We will see an uptick in these numbers, but they don't believe it to be significant and transitory. So what we're going to be looking at is the pound dollar and the. So what I'm going to do is I'm just going to make these two charts a lot bigger than the others. Oops, sorry, how did that change? That changed somehow there. Okay, so really looking at selling the euro dollar and also looking for a sell trade in these markets. So we've got the hourly, we've got the 15. So there's your structural failure really below that 121.15 off the back of the news. We had an impulsive move to the downside. Now we're getting the pullback, but our bias is still very much to the downside. So now it's a case of just timing. We got the dollar strengthening across the board. This reversal was kicked in on the dollar CAD, which we wouldn't be surprised about. And
so overall, it was a headline year-over-year increase on CPI, largest since September 2008.
September 2008 was the last time we saw a CPI figure this large. So I think that's fair to say it's quite a significant move. There's no doubt about it. We expect these markets lower now. On the daily time frame, so we want to see, do we get that kind of pullback, and then do we get this market just leaning over to the downside? Let's look at the S&P just on these lower levels. Just see where we're at. So you kind of want this price action to just play itself out. If it creates a bit of a structure, then all well and good. What price would we like this market to come back to? That's the interesting question. Ideally, all the way back here. If it can push up to 41.34, there's your no-brainer sell trade. And that's how we use support and resistance. Will we get that opportunity in this market after that CPI figure? Probably not. That level's all the way back up here at the 21.15. I suppose it's only a 20 odd pip move back to this level, so we still might get it. We still might get that opportunity to pull the trigger on that one. There's a little mini structure being created in here, so a flush to the downside could be a decent opportunity lower. Very, very surprised if we don't see these markets make new lows in the over the course of the afternoon. So yeah, you can look for other markets in other areas. This market absolutely has the fundamentals behind it to the downside. We do have to switch across to our trading room in just a minute as well. I'm actually running a bit late for that. So okay, so we are getting a constructive pullback. We'll stick with this for now. because we'd like these markets to pull back even more. Will it give us an opportunity to get in? That is the question. The market is relatively muted. There we go. There's our pullback. This is a strong rejection to the downside now. So there we go. There's an opportunity. I mean, this is looking horrible on bigger time frames. So we're looking at some of these markets off screen. There's your pullback. So that part of the criteria has been met. What we'd like to see is a little bit of a structure being created where a low is formed, and then you see prices break to the downside through that low. The sharpness of this pullback is and this is on a minute time frame as well, so we've still got 15 minutes to the top of the hour as well.
With an update in US money markets now pricing in 100% probability of a 25 basis point Fed rate increase by December 2022, as versus the 88% seen before this inflation print.
Okay, so
Results due to the 5-year tips break even inflation rate now jumping to 2.767%. That's the highest since 2011.
We kind of want to see this this pattern in this trade. So you want to see prices just congregate around these levels of support and resistance. That's kind of what you want to see. Okay, we're looking very, very hard, but the market has bounced back. We've pushed lower, and now we're attempting to break a new high. If this fails and we get prices ticking lower, then there is our entry. If it pushes to the upside, we're going to have to be a little bit more patient and wait for the structural failure, perhaps at a higher price. It's so volatile; it could just flash higher really, really quickly. Okay, so we can get ready to pull the trigger. The S&P's got a little bit more to go. Ideally, we're in the ballpark now, but so we can certainly get ready to pull the trigger. I'm really surprised we're getting this opportunity in these markets. So there's your bounce back to previous support. We are looking, so that's a strong level of support on the way down, and prices often bounce back to those levels. So these are firmly your pullback trades. Now, will they keep going, or will they run out of steam? You want prices to just congregate around these highs, a bit of confluence at these prices, and then you want to see the flush to the downside, so we can get ready to get into these trades. So this is the price at which you would want to be making a decision on these markets. Okay, we're making new highs. That's interesting. Really strong turnaround trades as well in the pound dollar. This doesn't look like it's stopping anytime soon. That's a pretty impressive turnaround in this market, around the 21.20 level. $21.43 is the high. You want to begin to see some form of reversal. So that's a strong rejection of the highs. Will this market close and then we'll start to head lower? Then that's the time at which we can get into this trade. It's already looking like it's gonna roll lower. Sorry, I keep flicking from the time frames because I am very interested to see what's going on in these different time frames. We do need to switch rooms, so we'll have to end this pretty soon, but there's a couple of decent trades here to the downside.
So we're just over 10 minutes time now to the top of the hour. So we wait to hear a response from the Fed following the inflation numbers. As Fed Vice Chair Clarita will be delivering a virtual speech to the National Association for Business Economics event. A text is expected from Fed's Clarita, additional Q&A from a moderator.
So we've seen a high, we've pulled back. So kind of a reverse situation of this one to the downside, where we saw some buying and then we saw an attempt to make a new low which failed. That's what we're trying to see at this point here. and that would give us a good opportunity to get into these trades. So we want it to push higher and then fail. We want this to push higher and then fail. So we always talk about these markets acting as per our expectations. So far, these are the levels at which we'd expect these markets to pull back to, and that's what's happened. So that box can be ticked. We've pushed a bit higher in the euro dollar. And now we're waiting for the rollover trade around a strong level of support and resistance. So this is the strong level of resistance. This is the strong level of resistance in this market. So will we get that push higher and then that failure trade? At which case there's your high probability sell trade. Same situation, push higher and then you see that little drop. And then that makes it, for if there is any manipulation in this market, it makes it quite difficult for they'll have to spend an awful lot of money to be able to turn it around, and they'll get a bit entrenched. So that's the risk you take if you do manipulate these markets. It's very easy to get burned. So now we're looking at the 2109 as our entry to the downside, with our stop loss above the 124, 120.43 level. So will this level hold in here, this high, the 121.23 level? That's the question. Because if not, and it rolls lower, then there's your high probability sell trade at that price. I really do need to switch rooms, but I'm just going to stick with these trades just for a few more minutes with you guys. This is quite tight, but there is potentially your sell trade below 41.25. Okay, so we can get into the S&P. If we can just get a close on that level. Okay, there is something going on here.
For me, sometimes the reflection is far more present than the thing being reflected.
Okay, so the euro dollar is off to the races or somewhere. I don't know where it's going. There's a very aggressive reversal if ever I saw one. That's a massive rejection to the downside and a lot of momentum to the upside. Still, this should be a very negative event for the S&P 500 and the US indices markets, and it's not. So what we've got is some negative news and mildly negative price action in some markets, and a remarkable amount of resilience and positivity in others. So a bit strange. That euro dollar is not stopping. Okay, that leaves us with a tough decision to make. Pound dollar. The yen is strengthening. Sorry, the dollar is strengthening against the yen. Swiss franc is rejection the highs. The dollar CAD has just exploded lower. Strong rejection in the Aussie dollar, New Zealand dollar. 50% retracement on that. Yeah, this could be a decent trade actually in gold. Certainly above the 1844. It's a hedge against inflation, gold. So there's still a potential buy trade above that 50.65. So now we're getting this little move lower. So we're going to have to get into these S&P trade to the downside.
So it's 3 minutes now until we expect to hear from Fed's Clarita, again delivering a virtual speech to the National Association for Business Economics event, with text expected to be released.
This is really likely to be quite explosive for these markets to the downside, and we're just not seeing it yet. So that's the situation with this. Okay, I am sorry, we're sort of 30 minutes late for our other trade room, so I better switch across. So Shubham, just regarding the comment that you made, just regarding aluminium, they've really soared.
To go now.
Like you won't be surprised to hear that that the commodities have been on a bull run now for quite some time. So and we're seeing it again in aluminium. So if you go back to prices around May of last year, we were down at, these are all in percentages, aren't they? But there's the growth that you can experience year to date. We're
10 seconds.
We're seeing an exponential move to the upside across a lot of these markets. So what's our bias? Is that for that market to continue to push higher? Will we see it?
Near-term labour market outlook more uncertain.
We're not too sure.
Outlook, Fed's Clarita says, as the economy remains in line.
These markets have already accelerated to the upside. So so on that note, we do like a potential sell trade, but in the euro dollar to the downside. But the bigger time frames now are looking awful. So this is just nothing but a strong rejection to the upside, and we're very close to getting into the S&P 500. We're going to look at getting into this trade somewhere around the this is your kind of your structural failure trade, so we'll see if we get a series of those. Nasdaq threatening to push lower, not much going on with Dow Jones. Actually, we've turned quite bullish again on the FTSE, the DAX. So this inflation story should really hit these indice markets quite a lot, and it's not really doing so just yet. But it doesn't mean you take your eyes off it. Continue to monitor it, and when we get that opportunity to pull the trigger, we'll see if we can take it. Okay then, guys, thanks very much for joining us as always. An eventful last half an hour or so. So from everyone here at the live trade room, thanks very much. Give us thumbs up if you can. Subscribe to our channel, and we look forward to seeing you all again pretty soon. Do keep your eye on that euro-dollar trade to the downside, the S&P to the downside. They're likely to be decent trades for us. We just don't have the opportunities just yet. So from everyone here at the live trade room, take care. We'll see you again tomorrow. We'll be back at 12 noon for everyone here. Bye for now.